Happy Friday, everyone. Jason Jacoby here with the main man, Mark Boyer.
Hey Jason, how's it going, buddy?
Happy St. Patty's Day.
I'm not wearing green though. What happened?
Me either, but hopefully we can get a little green in the market for the week,
That would be
holding
nice.
some positive numbers,
That would be
right?
nice. Yeah, yeah. Actually, the markets, except for the Dow's probably down right now as of this recording
Yep.
for the week. But S&P and Nasdaq up significantly, pretty handling the major averages pretty well. So yeah, that's a positive.
Absolutely. In tech, obviously this year's been on a pretty good run. I think Nasdaq sitting up around 9% year
Yeah,
to date.
9%. Had a big run, but it had a big loss last year, so there's a
True.
lot to cover to make up for.
That's really true.
So, but it is rebounding somewhat. So, and positively right now, they're all indexes are sort of right at 200-day moving averages, which is really important support levels. So, we'll see how this plays out with a week ago or 2 weeks ago. I guess it's been a week and a half ago. We were probably talking more about inflation, right? Everybody's inflation,
Yep.
inflation,
Yep.
and then out of nowhere pops up Silicon Valley Bank that hits the press on last Thursday, and rumors of a run on the bank, and
Yeah.
so it's been a rough 10 days or so. So it's and so we're in the middle of that right now, and inflation's kind of gone to the rear back door.
Yeah, it's nice to talk about something. Obviously, this isn't good news that we're talking about, something that we're constantly monitoring. And if you saw Mark's video on Instagram as of Monday, we talked a lot about Silicon Valley Bank, the bad investment decisions that were made. They had over 50% of their marketable securities invested.
Yeah,
Big banks usually have half of that,
yeah.
right? Just to have money on hand, cash on hand, in case there is people or a large number of people wanting to withdraw.
Yeah, I mean, so when all of a sudden people get nervous, they start taking money out. And what's on top of this, what's been interesting is you're seeing the digital age come to
Yes.
life, and what you can go to your phone, boom, and move $1 billion. I mean, that's significant. In the old days, you used to have to go to the bank and actually be there present. Now, I read stories about people, CEOs, and in buses and everything, just trying to withdraw money on their phones, right? So it just hit 42 billion on that first day of moving out of Silicon Valley
Wow,
Bank.
that's
That's a lot of money.
That is a lot of money.
And then when you don't have the securities there, you've invested them in 10-year treasuries, which are very safe, but yet with rising rates the last year, the values of those have all come down.
Yeah.
Remember, bond prices, as interest rates go up, prices go down.
Yep.
As interest rates come down, prices go up. So we spent the last year interest rates going up and the value of those have gone down,
Yeah.
inverse relationship, and it's just crushed them, their balance sheet. So then, sure enough, the big decision on Sunday to FDIC and
Bail them out.
bail them out. So here we go again.
Yeah, here we go again. But obviously some good news this week. Obviously there's been a lot of bad news in the market, but consumer price index, good measure for inflation, producer price index. I like to call it the front and back end view of the inflation story. Producers, consumers, both numbers are actually trending in the right direction, which is really good news. Could also kind of be a good setup for the Fed moving forward to see where we're going to go with rates. Could we be done? Could we maybe have one more 25 basis point rate hike and then pause, especially with all the banks?
Yeah, so the big talk again 10 days ago was 50 basis points. So Powell had come out and been very hawkish on interest rates, and really just like, hey, we're going to raise it, and we're going to go as long as we need to slow down inflation. Well, frankly, all that's kind of come to a halt,
Yeah.
and now the market is pricing in a 25 basis point, and some of you are talking about a pause.
Yep.
Which we don't think that's going to happen. We think it'll be 25 basis points, but they're going to have to slow down. And frankly, this bank issue may do the Fed's work for them, and on the inflation
Definitely.
side, because it's going to really slow down businesses and loans and different things until this all works itself out. So I think it actually has done the work for the Fed at the near term. So we'll see. But we'll see. Next week's a big week as far as their decision on what they do with the interest rates.
So we'll bring that to you next week. But one more thing we want to touch on. Obviously, we have a lot of bank fallout. First Republic Bank, another regional bank that got bailed out, $30 billion, cut their dividend, or actually suspended their dividend, which makes sense at this point. And then Credit Suisse, obviously, the Swiss National Bank actually had to bail them out after Saudi National Bank said nope, we're not giving you any more money,
Yeah.
not raising liquidity for you,
Yeah.
which sent the stock price actually in a downward spiral.
Yeah.
So.
Yeah, and today's getting hammered again, but we'll see over the weekend. Weekends make you nervous. You know, like, oh, what's going to happen on the weekend? But we'll see on Monday. You know, interesting that the stock hasn't gone down below yesterday again before the close here. I don't think it's below yesterday's low, so it's hanging in there. And anytime, I mean, you can't have a dividend when you're struggling, right? So they had to cut that, and that's always a negative for stock investors that invested in looking for a dividend. So
absolutely. And so the last thing we want to touch on is bond yields, right? So actually, bond yields have been tumbling a little bit, which is a good thing in the market. You and I were just talking about this. Bonds for the first time in a long time become an asset class, meaning there's actually some decent returns to be had now in the bond market, which we haven't seen probably since
they're acting like bonds. It's been phenomenal. I mean, so if you have bonds in your portfolio, you've actually rallied this week because, again, inverse relationship, right? Interest rates come down, the value of bonds goes up. So if you've been in bonds this week, which many people have, you've actually made money in those because they're worth more today than they were, at the beginning of the week, into last week. So very positive portfolios. Very excited about that. It's the first time in a long time that we've seen bonds actually.
Yeah.
Last year, 2022, was not a year where they both went in tandem. They were both going down. And this year, it's nice to have a little bit of a ballast in our portfolios with fixed income.
Boring bonds haven't been boring this year. It's been exciting. It's an exciting time for the bond and fixed income markets. And also, the 2 and 10 year obviously have been inverted. Used to be a pretty wide spread in those. And then obviously that has narrowed within 60 basis points. So things are starting to kind of correct out a little bit, which is a good sign.
Still pricing in a recession, and we think that's going to happen. And again, maybe they don't have to raise rates anymore. It's just going to naturally happen with all the turmoil in the banking system, which is going to cause loans to more regulation, tougher to get loans, and just causes the companies to have to rein in their expenses and kind of pull back, and that's what the Fed was hoping to see. So we'll see how that plays out.
Absolutely. Well, there's more info down below. Obviously, we just want to touch on a few key things. We hope you have a wonderful St. Patty's Day and weekend coming up, and we'll be with you next week. Have a good one.
Take care.